And I want to rephrase it because again, I'm learning. I'm always learning too, and maybe someone is out there learning with me. It's important to make sure you're doing that year-round planning, like James said, right? Get with someone that can help you. So instead of giving the government that interest-free loan, you get that money. The slide. There we go. Now we live. We are live on IG, Facebook, and YouTube. What's up? Welcome everybody to another episode of Technically Speaking, where we are giving you news
that you can use.
Yes. So as always, we have your host, your great host. Matter of fact, let me switch it up right there. There we go. We have our host, the wonderful Bobby Lopez. How you doing tonight?
I'm all right, thank you.
I like that. Very elegant, very demure. I like
demure. Very mindful.
Corey Giovanni, how you doing tonight, man?
I'm doing good, man. Kind of tapped in a little bit behind schedule, but you know, you got to do the honeydews. You keep
you're good, Corey. I'm glad you're here. Glad you made it.
I mean, I appreciate the commitment to the show, but you better have that commitment to the wifey. I'm not getting away. Then she coming for my neck.
Yeah, she gonna be like, why Geronimo got you like? I'm like, look, hold on. Keep the peace. KTS? I mean KTP? Keep the peace.
KTP, keep the peace. And I'm your host, Geronimo. And then we also have a special guest tonight. So before I do his introduction, we've been talking about loopholes, and Dr. Pooh is on, Bobby, because you said you wanted to make sure Dr. Pooh is on. He's here. What's up? Peanut Nas and Genevieve. But we've been having conversation about loopholes, right? And we were talking about
every time you say the word loophole, you got to put a on there.
There we go. So again, we've been talking about loopholes, and one of the biggest things that came up in conversation was taxes, the tax loopholes, legal tax loopholes. That is, I want to be very clear, because oftentimes when people say loopholes, they think you're implying some illegal activities. We're not about that, because I ain't got no bail money. So if you call us, hit us up. I ain't got it. So
I'm a civilian.
Yeah.
I ain't no thug. I ain't a gangster. I'm a civilian.
We snitching and all that. So don't do nothing around me.
It's not even called snitching when you're a civilian. It's called protecting your assets.
Speaking of protecting assets, I like that. So tonight's guest is the CEO and co-owner of JC Tax Services and JC Financial Services. And through his companies, he's providing financial solutions to individuals and small businesses. For all the small business owners that tap in with us, he specializes in tax preparation, bookkeeping, virtual chief financial officer services. Say that 5 times fast. Strategic year-round planning. His mission is to combat tax prep misinformation with truth and clarity. He equips his clients with the wisdom necessary for financial success. And tonight, he's going to help us all get ready for tax season. So Facebook, Instagram, and YouTube, welcome our special guest, Mr. James Hall.
Yeah.
Welcome, sir.
Appreciate it. Glad you made time to come onto the show, sir.
Oh yeah.
I'm glad to be here.
Hey, man. Hey, I appreciate it. So again, too, I do have to transparency. So he is my tax advisor. He keeps me out of trouble with the IRS.
Works so far.
It's working. It's good. So I'm a testament to his work, man. And again, for everyone, we asked him to come because this tax thing keeps coming up. It is tax season. So just to make sure we were giving real news you could use, we invited him to the show. So tell folks where are you at? Where are you coming to us from, James?
Absolutely, man. I am in Falling Waters, West Virginia. I like to tell people it's a resort town, man. It's a small town, about population about 1,000.
Wow.
But West Virginia, border of Pennsylvania, Maryland, somewhere in that mix.
Wow. I mean, when you said this earlier, sorry, I got to ask the question. I didn't even know there were black people in West Virginia. I'm just keeping it real.
Oh, yeah.
Well, I mean, that's a subject for a different time, but I'm glad that there are.
You are living proof there are black people in Virginia.
Absolutely. We here and it's all good.
Hey, that's what's up. So let's jump to it, man. So before we start getting to the actual tax advice and tips and tricks, like share something. How did this journey of yours start in taxes and financial services?
Absolutely. So, I mean, I actually went to school for networking and engineering. So I come from an IT background. I was a network engineer. And I came across this company, ventured into network marketing. They taught about financial education. They taught about business ownership. They taught about saving on taxes. And here I was, I filed my own taxes. I was doing what I thought was the right things. I was married, got children, and, just learned a lot about the whole concept of taxes, as well as the misinformation out there. I went immediately to my family, saw the misinformation. A lot of people just have these notions and pre-notions and presumptions about taxes. And it was just something me and my wife wanted to embark on. So we started our own company back in, I believe it was 2015, 2017 for our official business. And it's been just a journey from there to just kind of educate. So we try to do something different, make sure we educate our clients. I'm of the kind of thing to where if you're going to work with me, let me make sure that you have about as much information and foundation as I have. That way, if you do leave, somebody else can't screw you over. Mm-hmm. And I think that's a bit of a rare thing. I didn't find that. So I want to be that for other people.
For real.
Nice. So you got started 2015. I started coming to you in 2017. So you were 2 years in the game by the time we started working together. That's
Absolutely.
What's up. Hey man, you were so professional with it. I couldn't tell. I could not have I couldn't tell that you had just been at it for 2 years, man. That boy good. So you got two companies. You got JC Tax Services, and then you also have JNC Financial Services. Can you break down the difference of what each company does?
Yeah, most definitely. So JC Tax Services, we wanted to make it exclusively everything about taxes. So we do the compliance, the tax preparation. We work with clients to do paycheck checkups. The IRS pretty much recommends that every person have a paycheck checkup every year, especially if you got a W-4, because you're overpaying your taxes or you're having too little withheld. So we do tax consultations. We got compliance services, and then we also with JC Tax Services we do the year round. Because if you think about it, you're paying taxes year round. Taxes should be a year round thing. It should be something that's always thought about because you're always paying it or you're always having to pay it when it comes to business ownership. So that's our tax brand. And then we took financial services and we moved with bookkeeping, offering VCFO and those kind of services for JNC Financial Services to kind of segment the two. But we get to marry them both by being that kind of a professional for both clients to be able to give that financial analysis that they might not necessarily be able to look at their profit or loss or the income statements and be able to figure everything out, but also hit them with the information and the knowledge on the back end so they can see, hey, I'm profitable. How's it going to affect my taxes? Right. So it's a bit of a complete, solution to business ownership as well as the individuals that we work with.
I had to drop a bomb on that, man, because you're keeping people right. You the books got to be clean. So you use a pretty cool, fancy acronym, VCFO. What is that? And what does that do?
Yeah, so VCFO is a virtual chief financial officer, and it's pretty much an advanced stage of bookkeeping where we are partnering, because we call it a partnership. Whether between both of the companies, I'll look at it like this. If you're going to be with someone, let it be a partnership. A partnership alludes to a mutual benefit. Ooh, right. So if you are doing well, then I am doing well. So my job is to make sure you are doing well. So we both are doing well and we're both eating from the table, so to speak. So it's basically just being that financial partner where a lot of companies can't hire a six-figure CFO, is being that part-time CFO to give them financial analysis, to bounce ideas off of, to look at the financial statements and make sense of things for future casting and forecasting and things of that nature.
I like that. I wanted to highlight that real quick because we do have, a lot of small business owners that tap in with us. And when you're a small business owner, to your point, I don't have six figures to pay an actual full-time CFO.
Right.
But we still need those services. Bobby, her company needs it. Corey, your company needs it. Dr. Poole, everyone on here that's running a small business, we need that that service to essentially keep us out of trouble, make sure our vendors are paid, employees are paid. If we got them 1099 employees are paid, right? Am I like tracking along the right direction right there?
You tracking, man.
Keep tracking.
Man, so like when it comes to that, right? Because I know as a small business owner, resources can be slim, right? Like, what would you say to like the small business owner that's like, man, I ain't got the money for that? Like what kind of like advice can you give to someone who may think they may not have the budget for a virtual CFO?
So I think it's more along the lines of just finding someone that you can get a bit of a free consultation with. You know, someone who's willing to meet with you for free to kind of give you a look over in terms of things and be able to analyze, you know, something along those lines to see if it's beneficial. I would say that there are different lines of virtual CFO. There's different flexibility that we like to offer because someone might need more hours or more availability than somebody else. If you're dealing with the client that, you know, has got a mill coming in, they might need a bit more attention in terms of looking at their finances to make sure they're not making themselves go bankrupt than someone who's got, you know, $250,000 or 100,000. So it's just really having that flexibility. A lot of people don't necessarily, they're not flexible. So a lot of CPAs, a lot of bookkeepers, a lot of financial advisors, a lot of everybody, they don't really have the flexibility, but you want to partner with someone who's going to look after your best interest and not just trying to look after their own.
That makes a lot of sense.
Yeah.
When we were off camera, and I'm gonna ask you to jump in, Bobby, we were talking about the DIY tax prep. Can y'all pick that conversation up? Because I think this is really the true value that can help folks that are tuned in. If you don't mind bringing that back up, Bobby.
Yeah, so I had talked to James before we had started, and I told him I had some concerns because I DIY my own taxes. Because truthfully, if y'all do like I do, you can just kind of go through TurboTax and you kind of answer yes or no on anything. And if it's yes, it applied to you. No, if it doesn't. If it's not, skip and move on. You know, so last year I got to that close to that April 15th mark, and I started having a little panic attack because I was trying to do my business taxes by myself with no help. And so I ended up calling TurboTax at like 11 o'clock at night because I was scared and I didn't want to make a mistake. And they said their accounts were online 24/7. No lie. I got some dude named Kevin sitting up north somewhere just listening to me, and he was very helpful.
He was in Hawaii.
I don't know where he was, but listen, he was listening to me, which was very important because I was scared and I don't want to make a mistake. And I imagine we have listeners that we don't want to make mistakes on our taxes. The last thing we want is IRS coming to knock on our door, right?
Yes.
So I end up going through and clicking either yes or no, and I get to this one question and I didn't understand it, and I didn't know if it was a yes or no. So I clicked yes, and then all of a sudden my little figures in the corner showing their refund went up to like over 5,000, and then my heart really started racing, and not in a good way either, because that scared me because if in fact I am wrong, that's a big mistake to make. And so that's when I called TurboTax. So I'm talking to the guy and he's like, yeah, it's okay, but to be honest with you, I didn't trust him because I didn't trust myself. And so I end up going back. I didn't even tell the guy. I forgot the phone with him. I ended up going back and clicking no on that question. And then my little refund went down to like $500. I was just like, okay, you know what? That's more peaceful. Listen, I'd rather make a $500 mistake than a $5,000 mistake. You know what I mean?
Right.
And so I end up finding out, right, and after talking to James, and I'm frustrated and I'm scared. And so I find out too while I'm on the phone that apparently you have to file your little single member LLC taxes together with your personal taxes. I did not know that, and so now I do, and I would love it if James, if you could kind of touch on that, because that's not something that I knew and I'm learning. But this year I am going to do two things different. One, I am going to reach out to you when this is done. So we can get on a better personal level, so you can help me with some financial analysis and help me make better decisions moving forward with my business. And then secondly, I'm also going to have you or somebody else, if you can, if your plate's too full, to look at my business taxes from last year, because if in fact I was supposed to click yes, I want that money, and I want you to get your money too if you were in this position like me.
Yep. Hell yeah.
That's what
Give
you
me
call
my
an
money.
amendment, right? You would amend that, correct?
Yes, that would be an amendment to the tax. Which, you know what? Let's get to our first question, James. After you file taxes, how far back can you amend if you make mistakes early on in your
Good question.
business ventures?
Yeah, so the challenge there is you can only go back like 3 years.
Okay.
It really depends on what time of the year. If you're late file, like a lot of people will file in September, you don't really have as much flexibility, but you can only go back 3 years. So the problem with that I have with that is the IRS can go back a lot longer than you can. Of course, it's very important to be proactive and just at least have a good foundational understanding. But you can go back about 3 years.
Okay, duly noted.
All right.
And then just to expound upon that, like what we were talking about, I was elaborating on the fact that even with the DIY, it's a blessing to be able to have a low cost opportunity to do it on your own, but you still want to have the good, sound financial education and tax education to be able to do it. For a while, when I got started, Geronimo and crew, I was doing taxes on my own, and I was good. I was getting $2,500 back. I just had a kid, I had my son. I was getting $2,500 plus every year. Life was grand until I realized that I was giving the government a free loan, right? 12 to 14 months for me to get that money back. So that's another problem with the DIY is that, and it's not just the DIY, it's if you don't go to the right professional who wants to help you in that fashion, they can't tell you that, look, you're getting $5,000 every year, let's make these changes so that you can keep it in your pocket.
Right.
Boom. And why is that important?
Financial planning, right? Because that's the only reason why we ever truly earn money or make money or start a business is to enhance our finances. You go to work and you go to a job and you start a business to enhance your finances, a business because you're doing your passion, a career because you're doing your passion. But we make money to be able to sustain ourselves, to be able to thrive, to be able to not just survive. And if you've got $5,000, right? $500 extra a month, whatever the case it is, that's going and it coming back to you in one lump sum. One, you're going to be tempted to spend it when you get it. And two, you need that money for emergencies that are always going to happen throughout the year so that you can run your own financial plan. Now, most people plan with their refunds, but it's not advisable.
I don't do that, but I do know that there are some people that they cannot wait to get that refund because that money is gone within 2 weeks.
Oh, that used to be me.
Whenever not just with the tax refund, but with any large lump sum that I receive that I'm not planning on receiving, like just stuff that happens throughout the year. I've had it plenty of times. I just got to check because I apparently overpaid on my property taxes 2 years ago. I don't know. I just got to check one day. So I was like, oh, okay, cool. That goes straight into my money market because I want my money to make me more money.
Right.
Yes.
So I put that away until it truly needs to be touched. It doesn't have to be touched. Leave it the hell alone in that money market. Let it make money gradually as it goes through the year.
Let that money make money. There you go. Yeah, that I like that. To process it for everyone else. I want repeat that, Bobby.
I want my money to make me money.
And
leave it there. Good APY, and you'll see increasingly more money in that account every single month because the bank pays you to keep it in that specific account.
And I want to rephrase it because again, I'm always learning too, and maybe someone is out there learning with me. It's important to make sure you're doing that year-round planning, like James said, right? Get with someone that can help you. So instead of giving the government that interest-free loan, you get that money, do something like Bobby said, put it in a money market account, or where else could they put that money at, James, that can help them earn money, make that money work for them? Because you always tell me this.
Yeah, I mean, with the interest rates having risen, it's got its effects. But the biggest effect that it can have is right now the high interest yield accounts are doing about 4 to 5%.
Yeah.
So really, that's where you want your money at right now because that's doing 4 to 5% annually. And like Bobby was talking about, that's compound, right? $100 turns into maybe 100 and some change, and then that compounds every single month. The more you throw more in there.
Yep. Yeah. And then go ahead.
And a lot of people are not familiar with how many options are out there. You know, some credit unions have, 3%. There's some banks like SoFi. Me and Geronimo talked about it. The SoFi banking, they actually have it at 4.5% interest yielding right now, which is amazing. And I'm a person who likes to move money, so it could be in a 401k. I'll take the risk, but then move it into a high yield savings and reap the benefits later. And I know I have to pay taxes on that move. However, the long term effect is more beneficial than the upfront that I have to pay. Am I right? And I'm talking. As a matter of fact, we got the tax man on here anyway.
I mean, it's gonna depend, right? Because with the market has been pretty hot. So, having some money, sitting inside of an S&P index, which is doing, somewhere about 12% on average, is gonna beat a high yield interest.
A high yield, yeah, of course. However,
of course, you don't have to deal with the volatility like you're talking about.
Yeah.
It's safer with the high interest yield.
Yeah, I can be like, oh, throw 10,000 in there, get what? 10,000. What I get back? Like $400. Boom! I can take that $400 and buy a Disneyland pass.
There you go. There you go. Hey, you need that, man. This land is expensive. But no, I'm glad this conversation came up because it's the why, right? Like, why don't I want the government to get that interest free loan? Well, because you can use that money. You could be building interest off of that.
Right.
Or you can even put it and invest it somewhere else, right? That's just, I'm very risk adverse. I don't like the ups and downs and ebbs and flows that are very high. So I prefer the high yield accounts. Give me my guaranteed 4%, 4.5%, the compound. I'll take that. And just, James, this conversation came up too. So I'm gonna use his SoFi account to do what you've been telling me to do, to put my tax set aside money into that so it can grow some interest. I have my own personal high yield, but I don't want to blend. You know what I'm saying? And confuse the funds, right? I'm gonna put that pocket of money over here so we know it's just for that. Put my own personal savings in the high yield, like, so when I need to pull from it, like I got some AC work I need done, so I'm gonna pull from that, But again, the whole goal was to show how to apply all of this stuff right here. Another thing that's been hot too, and Corey had informed me of this too, and you kind of been telling me to do this too, but this whole BOI thing, man. What is the whole, like, just chaos with this BOI thing? Can you talk about that?
Yeah, most definitely. I guess to put it as simply as possible, it's the benefit ownership interest. And the Financial Crime Services Unit is basically putting something together. It got released in one of the last installments of trillions of dollars spent. And basically, what they're looking to do at a high level overview is to get all of the LLCs, the S corporation or partnerships, anything with a name and an EIN attached. And they're basically trying to figure out who owns it.
Yeah.
Because obviously, for whatever reason, at this point in time, they want to start trying to fix the money laundering problem.
Right.
Since you got a lot of people, corporations who are hiding money, in smaller tax brackets because they filter it down to single member LLCs or small S corporations. So at a high level, they're just trying to have accountability. Mm-hmm. But, if you drive it down, we'll have to see where it goes.
Right.
So it sounds like they're trying to cut back on some loopholes with that.
Boom. Don't forget to press the button. So that's
go ahead.
Because I heard about it like at the top of January of 2024, right? And I was like, oh. So I asked my tax girl about it, and she was like, well, you definitely want to do it, but they pushed it back. And today I had a conversation with her today. She was like, well, the ban was lifted as of today. Not the ban, but the deadline was lifted because they had pushed the deadline back, but they released it as of today. And I was like, I don't know what made me ask her, but I just wanted to make sure I was in the clear because I'm hearing that they charge you at least a minimum of $500 a day until you file it.
Yeesh.
That is unfortunately correct. So, I mean, for anybody right now, wherever you at, as the deadline is looming, because they tried to suspend it, then they try to suspend it again. It's best to file it. It don't cost anything to file.
It's
You can
free.
go to FinCEN. It takes maybe 5 to 10 minutes. Just get your paperwork ready, and it's not going to affect anything tax-wise. But going forward, should you have any changes of address or should you have any changes in ownership, they want to know about it.
They want to know about it. Yeah.
Yeah.
Which I did it today. I did it today, and it literally took me 15 minutes. The hardest part I had was uploading my ID. That was the hardest part, because I hate putting my credentials and stuff like that on my computer, but I had to do it. But I got it done, and I was like, ooh, I got the document saying success. You know what I'm saying? Here's your BOI number, because they give you a number in order to do it. And when I was doing it, I was talking to Geronimo. I was like, did you do yours? You know what I'm saying? I know he said he's gonna hold back one. I was like, okay, well, yeah. Ask James, man, because that's $500 charge a day. Like,
I'm gonna do it. It's just that when I went to the site to go do it, I saw that little alert that they had that because of the federal case that's going on, it's not due right now. I had other stuff to take care of real quick, so I'm gonna get to it. I will. I'm not gonna do it. That's just you have me panicking. I'm like, let me hurry up.
Yeah, the only thing. Yeah,
okay. So I'm a little bit confused as to what it is y'all are talking about, because one, I've never heard of the POI, but two, James, can you expand on the whole $500 a day? Is this something I need to be doing, and if so, why?
Good question. Yes, and every small business owner that's on here, pay attention right now.
Yeah. So basically, you as an LLC owner, they want to know basically where you reside. It's basically, for registered agents and anyone who's a member, they want to know and have on record where you are, and if you change your address or something. And it's basically, I guess, in a sense, if something fraudulent comes down the pipe, they want to know how to find you, pretty much.
Okay, so this is kind of like a verification process that they're doing to confirm that the owner who's filing the taxes is in fact the one on the actual business paperwork.
Pretty much, yes.
Okay.
So what happened is there was a lot of businesses that did not really have an owner. They were just owned by other businesses. So you can see how it's very easy to cloud some things in there.
Yes.
Yeah.
So they, and the deadline really is, as far as what I just see now, it's really today. You want to go ahead and get it filed. It, like you said, it takes about 10 to 15 minutes to get it done. But you're basically just saying, I have ownership and I'm a registered agent of this particular business name.
James, what's a registered agent?
A registered agent is someone who was used to sign up for the actual business.
Can I be my own registered agent if I have a single member LLC?
Yes, you are your own registered agent.
Unless you go through LegalZoom.
Yeah, that's a different story.
LegalZoom hit me. Oh God! I was like, I don't even know you.
So I had two businesses, and my very first one, I did have somebody else as a registered agent, but I was paying them like $100 a month. So I was like, oh. The second time around when I made my LLC, I was like, I'll be my own damn registered agent. F you. No. I was like, oh, I can do this on my own. I was like, I can do all the administration part. I was like, I ain't even concerned about that. If you can do that. If you can do that. Maybe some people don't have the time, or you do have the expense for it, by all means, have somebody else do it. But you can be your own registered agent.
So the recommendation is file that BOI report ASAP, because at the end of the day, it's going to be due. I don't want that $500 a day fine. I don't want that. That doesn't work in my financial planning at all. No.
Because here's the thing. This is what got me when I got shook when I heard how much it is a day after you go over a day. So my thing is this: if you forget about it and be like, oh, I forgot. Oh, it was due yesterday. That $100 yesterday. You forget it next week. That's $3,500 because 7 times 5 is 35, and 7 times 500 is $3,500.
Nah.
I was like, for 15 minutes? For 15 minutes? No.
Nah. Go ahead.
I was almost late picking up a kid. I was like, they can wait. Let me get some McDonald's afterwards.
Pay the little late fee at the daycare versus paying that $500 day late fee with the BOI. Man, So a couple of topics that you wanted to talk about, James, was common misconceptions with tax prep. What are some of like the top common misconceptions people have out there about tax prep that you've seen in during your time of work?
Yeah, so I mean, the number one really is that all business expenses are deductible. The reality is it depends on the expense, right? Because the business, according to publication 535, the expense has to be ordinary and necessary. And then there's also the concept of, is your expense, especially for meals, too lavish? So there's this misconception that all expenses are deductible. You got 15,000 in expenses, you can use all 15,000. But the reality is some of the different expenses are categorized different, so they're weighted different. I get a lot of people who have home offices, and I encourage it. I'm in my home office right now. But the reality is you might have 20,000 in home office deduction expenses, but you don't get to use all 20,000.
Yeah.
And when people come to me, I have to break it down to them, explain it to them, because when they used to file it, they were filing it on the Schedule C, right, for business. But it goes on a completely different form that feeds the Schedule C to take into account percentages. So not all business deductions are equal as far as expenses, and you can't use all of them, especially in the same tax year.
So IRS uses a formula to calculate exactly what deductions you can use whenever you're filing your taxes.
You as the preparer, if you do it yourself, or the tax preparer knows how to calculate the formula. So it's going to be based on a percentage. For example, you might be using your cell phone, which is very common. But if you only got one phone, you can't be using it 100% of your business.
You know what? I know what you're talking about, because last year when I was trying this on my own, I had to calculate the square footage of my home office compared to the square footage of my entire home, because I could only write off the square footage of my office space, not the entire amount.
Office space also.
Exclusively office space, yes.
So
I do remember that.
I have a question about the exclusive office space, right? So, because I'm in my office right now in my home, right? However, it's in my son's room. I don't write off the whole room, do I? Or do I? Because I store my equipment in one part of the room, but as you can see, I'm handling the business on my computer and my desk in the room.
Right. So let me give you the best professional answer. The IRS wants you to have someplace exclusive. And exclusive means that it can't be used at any point in the year for anything else. If it is, then it's not really dedicated as a home office. They want you to have a dedicated space that you use. And I've seen some tax court cases where it becomes challenging when they try to substantiate those home office expenses, but they don't have a place that they can call exclusively, this is my home office.
Got you. So since I'm sharing it with my son, that wouldn't be considered a home office.
That's correct. So for example, my old house, I used to have my living room I used to use. Well, the living room is also used for entertainment, for personal. This is not going to work. You might have some opportunity, depending on what you can truly prove, but it's probably good to err on the side of caution. You might be able to carve out a percentage of that, but that'll be something that you want to have a chat one-on-one to kind of figure out the specifics.
Got it. Okay. Because majority of my stuff is in here. He has a bed in the closet. Everything else is my computer. I got office. I got everything. I even got a treadmill. I know stuff. I know like exercise equipment, depending on the industry you're in. Those are like tax deductions, I think. Yeah. So I have a question. I'm not sure if we're going to move off this topic or not, but
keep going, man.
No, we need to stay on this topic because I have one too.
Oh, go ahead. No, keep going. Okay, Stay on this because we need to get all these conceptions cleared up. Good point.
So it has something to do with deductions. What's the difference between tax credit and then the deduction?
Very good question. So tax credits, if you think of like something like the child tax credit, they reduce the tax liability, or what's called the tax responsibility, or basically what you're supposed to pay for the entire year. They reduce it dollar for dollar. Okay. So for example, child tax credit is $2,000. If my tax liability for the year is only $2,500, well, the child tax credit is going to take up dollar for dollar $2,000 of that. Right. So really, the only thing I'll have to pay in for the rest of the year is $500. Tax deductions are weighted on basically a percentage, basically. So you might have $10,000 in deductions, but it's not going to reduce your tax liability of $2,000 to a point of it's negative $8,000.
Right.
It reduces your taxable income, and then you have a percentage based on your marital status and everything else as far as how you are taxed on that.
Right.
If that makes sense. You got if you got $50,000 in taxable income and you got a $10,000 deductions for business, if it's a loss, you can reduce that down to where you're only taxed on 40. But the credits, obviously, they're dollar for dollar, where the deductions are based on the tax rate percentage.
Got it.
Good question. Good question. I know that cleared it out for a bunch of people. So I know a lot of people like, nah, man, I got about $50,000 in write-offs, man. I'm good.
Yeah, you know what I'm saying? And then, you know, people do the BB, you know what I'm saying? And we're not gonna get into the BB, but you know what I'm saying? Just the BB, just to let y'all know, they be borrowing babies. And we try to make sure.
Okay, I was like, what's the BB? The borrow the baby. Yeah. Okay, that's that hood stuff right there. Hey, you know what? You brought it up. Like, expound on that. Like, what's the pros and cons of doing the BB, borrowing the baby for the tax return? Like, have you seen anything with that?
Of course he has. He's in tax.
I didn't hear it, man.
Yeah, there are some challenges with that, and there are rules that we have to abide by. So we have a due diligence sheet that we have to fill out to make sure we're asking the right questions. Now, if Jim is trying to claim, nephew, because it's going to benefit him tax-wise, well, the only way that Jim can do that is based off of the specific IRS publication rules that allow him to do that. If Jim comes to me with his nephew saying, hey, I took care of him, I need to have a conversation with Jim and say, how many months of the year do you live with you? If he didn't live with you, do you have proof that you did take care of him? And those two questions really are going to determine whether Jim is going to continue to try to proceed with that, or if Jim is going to say, nah, it's good.
Yeah, because I think the IRS determines if the child has lived with you for more than 6 months, they have to live with you, I think, for more than half the year. And you have to provide, I think it's 75 or at least up to 100% of their expenses.
Right.
In order for you to be able to put them in. I don't think it's just children. I know one year I claimed my mom because she lived with me. She wasn't homeless because she lived with me, but I also took care of all of her expenses for that year because she didn't have anything.
Correct.
So
and it's really
I told her, hey, look, you can't pay me back. I'm claiming your butt on taxes. I'm just letting you know right now. I'm gonna get me something back for helping you.
So that's actually more normal than we think.
Yeah.
But, the borrowing babies, nah, they're not playing with that anymore.
Yeah. So borrowing bodies.
Folks that might hear that. Say that one more time.
The borrowing babies, the IRS is not playing that game anymore. So borrowing bodies either.
I can't wait to see the tagline when we put this bad boy up on social media.
Nah, that's real stuff right there, man. We need to talk about the real stuff we deal with, because that's real. I remember growing up and hearing aunties and uncles be like, hey, let me you got too many kids. Let me borrow that baby.
For real. I'll never forget when my mom was like, Giovanni, because they call me by my middle name. I was under 18. Statute of limitations is lifted. It was like, Giovanni, auntie gonna borrow your social security number. I'm like, huh? You just telling me? I'm like, I work. I have a 9 to 5 after school. Well, I got a 3 to 8 after school. It's gonna be okay. And then I find out my auntie and my mama mad at each other because of the fact of you borrowed Giovanni's baby. I mean, you borrowed a baby, and it wasn't your baby.
Yeah, no, that was a good one. Because I still hear ramblings of people saying that to this day. So be careful out there, y'all. Protect your neck, man. Don't be getting yourself in trouble. Tell you what, man, the IRS ain't no joke, dog. The IRS
it ain't worth it.
Hey, man, aren't they the ones that took down Scarface? Wasn't it the IRS? Right? Am I lying?
I thought it was his brother.
It was John Gotti. It was John Gotti. They were the ones that went and got John Gotti. It was the IRS that took him.
Okay, that's why I didn't know what you were talking about.
No, I'm sorry. It was John Gotti, the untouchable. They were IRS agents.
So since we're going back to deductions, right? Bobby, go ahead and ask your question because I got a question after you.
Okay. So, real life scenario, I'm going to change up some of the figures just to kind of keep my stuff to I don't want to say to myself.
You don't want to put your information out.
This is real life stuff. What if somebody else is coming to this issue? So, James, this last year in 2024, I had a Suburban, and we used our Suburban to pull a trailer. My husband and I have a water mitigation business, and so all of our equipment, whenever a house floods and we have to go get out there and take care of those people very quickly, we carry humidifiers, fans, all sorts of stuff with us to get out there and take care of them. So what happened was we ended up gifting our Suburban to my brother-in-law and my sister-in-law. In exchange, we ended up gifting them the Suburban, paid off Suburban, and we ended up purchasing an actual work truck, something that we could haul equipment in, but also in the back, right? We ended up paying that in cash. So what can I do whenever I'm filing my taxes? Am I able to say that, hey, this is a gift that I gave to them, but also get a write-off because I had to buy a truck for work? And it's specifically for the business.
Yeah, so it's two separate events. The main thing is, as far as the Suburban, the Suburban should have had likely some level of what's called depreciation on it in terms of tax terms. So did this all happen the same year that you started your business is the question? Or did you already have a year where you filed taxes with the Suburban on it?
Last year was the first time I filed taxes. And the Suburban was paid off last year too.
Okay, so you got to be careful because when you bring in a business or a vehicle or anything really as an asset, the moment that you remove it as an asset, there's likely going to be some payment that you have to make in terms of depreciation. So you have to actually report it that you sold the asset or the asset's no longer in use. There's a lot that goes into that to kind of give anything specifics.
We signed a specific paper that had to be notarized to the state of Texas through like the Department of Motor Vehicles, where we had to meet at a bank, and the bank had to notarize it that this was a gift. So we had to transfer paperwork, and it was noted as a gift.
Oh yeah. So what you'll find is that state law and some things in that area, they don't affect federal law.
Okay.
Taxes is a whole different ballgame apart from anything that you just did. Now, as far as a work truck, you'll be able to use the work truck because when you file taxes, there's a form that you're going to fill out where you're going to put that you use the vehicle for business from this date to this date. So obviously the Suburban will have a shorter period or have a cutoff period where the other work truck picks up and you start using it from this date to the rest of the year. So it's going to be recorded as two separate events basically. But as far as the gifting of the Suburban, because it was used for business, there's likely going to be some kind of level of depreciation repayment that has to happen, even though it was used for a short period of time. Then that all depends on really what kind of expenses you have for it, if it's going to produce any kind of tax bill.
All right.
Good question.
Yeah, when it comes to business assets and transferring them over, there's this whole kind of conversion process, even with homes and rental properties and things like that. When you convert them over, the government says, okay, well, this is now a personal asset. And you switch it from a business to a personal, there's some things that need to happen so we can make sure we are involved.
I'm going to be working with you on that in years to come. Good question, though. Good question.
Very good question. Very good question.
Yeah. So another thing you wanted to talk about, James, was the things small business owners need to know tax-wise to run their business. What are some of those? What are the things that, hey, I'm a small business owner X. What things do I need to know to efficiently run my small business from a tax perspective?
Absolutely. So the number one really is going to be effective record keeping, right? Whatever tool that you're using, if you're using a spreadsheet, I advise that you upgrade because as your business grows, you want to be able to show balance sheets. You want to be able to show income statements, and you can't really do that with a spreadsheet. So getting some kind of accounting software, having a fundamental understanding of how to categorize the business expenses, Effective record keeping is everything, because even when it comes to business loans, you can't turn in some jacked up records.
Good point.
You know, and then number 2 is no commingling, right? Personal is personal, business is business. A lot of people start out and their accounts are connected. You know, I tell people, when you don't really have the funds yet to start a business account, just get a separate bank account so that money tracking in for business stays business, even though you pull it over to yourself, and expenses stay business, so that you're not having to commingle the funds. When it comes to IRS, federal, state, those are 2 of the things that really jack people up in the court cases, because if you don't have the proper record keeping to back it up and you get audited, there goes your deductions.
I have a question. Say, for instance, I have a business credit card, right? And I have everything that's coming off on the business credit card monthly. Like I run my social media, my ads, I run my things that help my business run. I can just literally just take those and then throw them in like QuickBooks, right? Everything that I pay monthly, and then will those be considered deductions that I can use for when I do my taxes?
Not by themselves, no.
Okay.
So yes, you're right. You can connect it to QuickBooks. You can connect it to another software I recommend called Wave. It'll connect to the bank feeds. It'll pull it in, but it ain't gonna categorize it all of a sudden for yourself.
Wave.
You gotta be able to put them in the right categories. QuickBooks does not categorize 100% accurately. And then on top of that, bank statements and bank feeds, they're not enough to substantiate a meal, right? You need to make sure you're keeping track of receipts, which you can do in accounting software, or you can have a separate folder in your cloud drive, wherever. Keep track of receipts, and then be meticulous with your details. Just because you went to Roy Rogers don't make it a business expense. What was the reason you went to Roy Rogers? Who did you meet with? What substantiates it as a business expense, et cetera, right?
Wait. What's Roy Rogers? I never heard of that before. Is that like a Ruth Chris or something?
No, it's like a McDonald's actually here, but you know.
But you said
wait, really? Because it sounds like a country music star.
Hey.
But you said keep track of. Say that again.
Keep track of the who, what, when, where, and why this is a business expense. Keep track of the receipts. A lot of people say if it's under $25, don't worry about the receipt. I say worry about it in case you get audited.
Mm-hmm.
Better safe than sorry.
Does
right?
have an app that you can use so that when you do go, you can immediately scan it while you're sitting there at the table before you forget? Because that's a big thing. Because if you're using a QuickBooks software, I don't remember personally if QuickBooks has an app, but I do know how to use QuickBooks. And so I think that's something that you would have to either upload with your phone and then send it to your email to save it onto your QuickBooks. So that's like additional steps that you'd have to go through.
Yep, with QuickBooks and some of the other accounting softwares out there, they do have an app or a way through the website that you can upload directly to the transaction. So they try to make it as simple as possible.
Mm-hmm.
So the reason why I use spreadsheets, right? So on my spreadsheets, I have 2023, I have StreamYard, right? Use it for social media, online, podcasting, XYZ. I have all that documented. Then when I do my taxes, I can use that as a deduction, right? Because of the fact that I have witnesses, Bobby, Geronimo, and other individuals that's been on the podcast, right?
Yes, absolutely.
So
that is definitely a business deduction.
Got it. The reason why I say that, because I have multiple things like that, and I just want to make sure that when I go send these over to my my CPA, that those things will be counted for. And you mentioned something earlier. You said that there's so many deductions that you can use, but you can't use them every year if you use it one year from the other. Can you elaborate on that?
Yeah. So what I mean is that you might have certain deductions that carry over. So home office is one of those things that carries over from one year to the year, depending on your profitability. So some deductions are weighted to the point where if you don't make enough profit, they carry over to the following year. They have what's called unallowed expenses for you to use in future profits. Most deductions that I tell people to focus on are the ones you can take in the same year. And then to also talk to what you're talking about as far as the spreadsheets, I would encourage a bit of an upgrade, because the problem with spreadsheets, and I do have a couple clients that use them, is that you can't forecast, right? You really can't forecast, nor is there the ability to do a balance sheet, nor is there the ability to really do a good solid profit or loss. And I don't really have the time to get into profit or loss, because it might look like you're profitable 20,000, but you're really profitable 50 if you don't understand how the deductions are weighted and what you can actually use.
Got it.
Yeah.
No,
yeah.
So, I mean, because I'm just trying to make sure that everything that I use for business expense, I have it auto credited off of a credit card, right? So that way I can be able to just keep track of what my 2024 expenses were, and then throw them in that spreadsheet, and then also give it to my CPA and let her do the boom, 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 the deductions. That I currently use a bank account with a small business bank account, right? It's called Lily Bank, and they actually make they do the C1, they do the deductions, they do all of that, and give you a net profit at the end of the year, where I can send over there. However, I feel like I'm missing out on some of the things because of the fact that I have a credit card that I use for business specifically, and I want to make sure that I'm getting all the tax deductions that I'm supposed to.
Well, let me just point out something really quickly as far as what you said. And I want everybody to catch this who's listening, right? You want to make sure that you're getting all the deduction that you're supposed to. And at the same time, you also said you work with a professional. And you can see, if I'm making a direct correlation here, if I can, that's the brokenness.
Yeah.
Because they should be helping you to make sure that you are getting all the deductions that you're supposed to.
Yeah. Yeah.
Your CPA's account.
Well, I only come to her once a year because I'm still a single member LLC.
Gotcha. Okay.
You know what I'm saying? This year is not going to be that year. I promise you, it's not. It's going to be a big year for me because I see it and I'm claiming it. The only thing is I want to be prepared for it. You know what I'm saying? You absolutely want to prepare for the riches you plan to have. Yep. That way, proper planning prevents poor performances. And I want to be able to be in that key mind frame to be like, okay, well, 100K then came in this quarter. I want to be able to be like, okay, what do I need to do with this?
Yeah. Yeah.
Most definitely.
Couple of things. We got some comments on IG. This is from Team Dunham. What up, Dunham? Hey, we need you on the show, by the way. So I've been hit him up a couple of times. He's coming. We're gonna get him. But he said the Genius Scan app is a good app for keeping documents using your smartphone. So that's if you're looking for an app to scan your documents. Say what now?
I use it a lot, and I do highly recommend it.
Nice.
I've used it for years. It's really good.
And then when you said you're gonna claim it, Corey, Danny Bernay, she did the hands up like, yes, we getting that. We getting that. I want to cap this segment off with application, right? Because I don't want to just say, hey, do this. I want to show you how to do it. So to James' point, and to your point, Corey, I also have a subscription under one of my companies for StreamYard, but I also use Wave. So my bank account and credit card is connected to Wave. So every month when it gets that expense, it's already tracked. And then I just go categorize it, or I confirm the categorization in Wave. And he's my virtual CFO, so he sees all of that anyway, right? So he sees everything you're talking about because he's keeping me straight and he's hitting me up if I miscategorize anything, right? He's like, hey man, what's this expense? What business is it for? I need more details. I need more information, right? So I'm going in there. Also, to his point, on your professional should be keeping you straight, right? Because he's always letting me know, he's highlighting, what is this? You use the vehicle, which vehicle, what company, what was the activity, who were you having meals with, right? Like he keeps me sharp to make sure I'm good. So I wanted to tie that together so that way people see how do you use all of this, because I believe in automation, man. Tech Von Go, baby, it's in the name. I use the tech to keep me straight with my taxes in addition to the human AI or the human intelligence, because I need that person. But I really wanted to get that out there to show how that's how I'm doing it. So when he's naming some of the stuff, James, I'm sure you've seen some of those app names. in my back office. Nah,
James,
that was good.
I have another question that that maybe people have come into this before. Let's say you have a parent and they win a settlement from a car accident, right? From a lawyer. Lawyer takes their cut, and the parent is left with this other large amount. Parent does not have to pay taxes on that settlement amount, right? So if this parent gives a child a small piece, not a huge piece, just a small piece of that, do you have to report that and pay taxes on it, even though the primary, account holder didn't?
Yeah, so that's a little different because you're getting into something called the gift tax, or the threshold for what considers to be a gift, which changes from year to year. That is something I would have to say probably more of a one-on-one. You're right. The person who gets a settlement, when you get a settlement, you usually don't have to pay any taxes on it, depending on the kind of settlement, especially if it's a personal injury. But as far as getting
personal injury settlement.
Yeah, as far as being gifted any other money, there may be some other things that have to be included there, but there is a threshold for gifting. I can't recall it at the moment. I think it's somewhere in the teens or a little higher, but I don't want to tell a lie. But there is a possibility that you don't have to do anything with it, but it's always good to get a second opinion to make sure you don't.
As a virtual CFO, do you have to be knowledgeable about all the different tax laws? Because I imagine we're in the state of Texas, right? Tax laws are going to be different here than they are in Virginia. And so in order to prepare to meet with the client and have a consultation with them, what are the kind of things that you do as a virtual CFO to make sure that you're prepared for what it is they may ask?
Absolutely. So I guess it comes from working with a lot of other clients tax-wise. So we work with clients in over 20 plus different states, which gives us a little leeway when it comes to filing to be able to know more about their tax situations, as well as the states that they operate in. So really it's just education. If I got a client, in Texas, knowing about the franchise tax is very important. If I got a client in New Jersey, knowing that they're going to be charged for a multi-member or an S corporation per partner, $150 each just for filing it is very important. So it's really just like with any other business, or I guess you could say with your service. You do your due diligence so that you can be a best service to your client.
Yeah.
That's where preparation comes in.
Thank you for that answer. Do you often find that small business owners who are also disabled veterans in their state are often given, special, I don't want to use the word privileges, but they're given special tax incentives at times to be business owners? Do you find this happening on the federal level, or just it's more like state to state?
More like state to state. They would be the ones that have more flexibility to enforce something like that without it getting necessarily taken advantage of.
Yeah. No, good question. I mean, hey, shameless plug for the vets in Texas. They take care of us out here. If you're trying to be an entrepreneur and you a veteran, come to Texas.
All right, Death Row.
Come to Death Row. Nah, that was a good question. So this keeps coming up. It keeps coming up. Tax planning. So elaborate on what your definition on good tax planning is, and explain to everyone, individual, small business owner, why year-round strategic tax planning is so important.
Absolutely. If I can put it in the most layman terms, taxes is all year. Whether you have a job or whether you have a business, you're going to be looking to estimate it or trying to figure out sales taxes, right? Taxes is in everything. We see it in everything. When it comes to an individual, it's important to have a plan in place to make sure you're not overpaying your taxes, but to also make sure you're not underpaying your taxes. The only way that you could do that is to have effective monitoring all throughout the year. A lot of people have already experienced the fact that, they've gotten a raise in 2024. And when they file their taxes, they're going to realize, oh my, I just jumped the tax bracket that I was not prepared for.
Right.
When it comes to the business side, right? Small business owners, you may have a breakout year, like Cora was talking about, in the 100,000 just dropped over the course of the year. Well, now what happens with that, right? You've got the 15.5% almost for self-employment tax. Then depending on your tax bracket, whether you file a married, joint, head of household, single, you got the tax rate for that. And then depending on what state you live in, You got the
California.
state tax.
California. Ooh.
Yeesh.
Okay.
Yeah.
That deserves a sound right there.
Yeah. Yeah.
So you got the double-digit percentage when it comes to state taxes also.
Right.
So, we have a tendency to want to just go make, go earn, go enjoy it, and go spend it. But that's not good when it comes to financial planning.
No.
That's why we encourage year-round strategic planning, simply for the fact that across 3 or 4 consultations throughout the year, if something happens with one of my clients, it doesn't have to be a bombshell that gets dropped on them at the beginning of the year.
Yeah.
Because I've had that happen, unfortunately, too, to someone who didn't want to get the plan, and then they made a bunch of money, and then when it comes to file, you owe double digits.
Thank you.
And they weren't prepared for it.
Yeah.
So it's planning with anything. Planning, as Corey talked about, you want good performance.
Yeah.
Yeah.
So,
Yeah.
There's a lot of questions that I have.
Ask them. That's why we here.
I know, but I want to make sure that I'm asking these questions not just to benefit me. All right.
Yeah.
So, in California, there's and I don't know if it's just California, but when you buy an electrical vehicle, there's a lot of tax credits that you can get, right? Can you elaborate on the ones you can get and the ones you can't get?
All right. So just predominantly in general, you want to, it's going to be more applicable for everyone in terms of the fuel and tax credit, which is federal. And even that is going to be very specific. So I had a sibling who bought a vehicle, and he's got the money to do it, right? He got a Tesla, he got a mid-size, good size, but and his tax person talked to them about being able to qualify for the credit. However, he went over the threshold of how much the Tesla was, and then, now you have a Tesla, but you don't have the credit.
You don't have the credit. Right.
It's going to be crucial to look at all the minute details to figure out what are the qualifications for the credit. I had someone, just to kind of give it a comparison, they wound up, spending a lot of money on windows, only to find that the window credit only gave about a few $100. Right. We're talking about double thousands, in terms of replacements. Yeah. So it's pretty much essentially the same. You can get the credits, but you just got to know what the details are, and that's something that it's important to kind of look at state by state, as well as to look at what the solar credit.
Yeah.
Yes.
I qualified for solar credit a few years ago. We had bought a solar panel system, and what ended up happening is you get that solar credit. It was like $7,000, but in those little details like you're talking about, we ended up having to take every single penny that the federal government gave us and pay it towards that loan. You didn't have a choice. You couldn't pocket that. You had to pay it towards the loan. I was, would have liked to have, to pocket that, because we're still got to pay for the panels over time. But no, you had to absolutely give it to the company. They gave it to you, but it went straight from your hands.
It was like a rebate.
It was more like a rebate. Yeah.
So that's also going to vary from company to company too.
But
yeah,
it did take that $7,000 off of the loan because we were able to pay that towards it.
Right.
Nice.
So you just think about it, you're like, okay, you just decreased your debt by $7,000 and you didn't really do,
right.
Every little bit counts, man. Every little bit counts.
And so another question, of course, that I'm having, when it comes to buying a vehicle for your business, obviously you're going to be driving it for business with you putting out the, because my personal business has my personal vehicle has the registration, the tag says Corey NT, right? It's my business. But I go to business with my vehicle. What things should I be writing off that I'm using? Should I be writing off the fuel? Should I be writing off the miles? Should I be writing off the tires? Because I am going to business, handling business, and then I'm going to locations. I know to keep track because I got Waze, so I can go into my Waze, I can go into my Google Maps and pull up all the locations throughout the entire year 2024 that I travel to. can you give me the best way possible where to be able to benefit from any deductions?
Absolutely. One question first though. Is this business separate from personal?
Yes.
Or is it? Okay.
Totally separate from personal.
Okay, cool. All right. So it depends. Are you making payments on the vehicle?
I paid it off this year.
Okay. All right. So
Last year, I'm sorry. Last year.
Those are the kind of questions I would try to dig into to figure out what's going to be more beneficial. For your particular case, since you're not, you would probably benefit more, and most people would benefit more from the standard deduction as far as mileage, because it's very high. Now, you might have a year where you have a lot of expenses for the vehicle, and then mileage might not be the best deduction for you. Now, I encourage people, when you have a first year vehicle, first year in business, don't start it off as what's called actual expenses, where you can claim the fuel, claim the maintenance and things like that, because you can't flip-flop back and forth unless you start with mileage first.
Oh.
Yep, you can't flip-flop back and forth unless you start with mileage first. So for you, it's really going to be mileage. Now, what you can do is keep track of all those expenses, but the reality is it's really mileage or actual expenses. Actual expenses is your gas, your maintenance, car wash, anything of that nature.
Whatever that gets me to the business that conducted. Like, say for instance, if my brakes went out, right? And I need my vehicle to get to where I need, so I do need my brakes. Am I able to use that? And that may be more than my mileage.
So it goes back again. If you started with mileage the first year around, there's an opportunity to go ahead and use actual expenses the following year.
Got it.
But usually, because you're running the business, the vehicle 100%, there is a possibility that you might have a year where expenses beats out the mileage. But I'll tell you, from what I've seen for the past several years, mileage usually always wins.
Okay.
Why is that? Why is that?
Well, it's the mileage deduction, right? And then the reality is most people aren't driving one vehicle exclusively for business. So because of the kind of asset that is a listed property, you got to take the weighted percentage, right? So if I drove 10,000 miles for the year, 5,000 for business, and then 5,000 for personal, well, I can only use 50% of those actual expenses. Yeah. But I can use all 5,000 of that mileage. So mileage likely would be a bigger deduction than trying to use 50% of the actual expenses, especially if I had a good year where nothing really went wrong.
Right. Yeah.
That's the key right there. That's the key right there.
Because see, I like, now that the car is paid off, I want to solely use it for my own business. I mean, use it for my business. Or I was actually even thinking, because of the fact that I want to start a nonprofit this year, I can gift my business or personal, because that one, the registration is my personal name. So I can gift my vehicle to my nonprofit and then use my nonprofit inside that big vehicle. You know what I'm saying? I'm not trying to like rework. I want to do it the right way without having to buy another vehicle.
Right. So I mean, that would be more of another one-on-one, because nonprofit is handled completely differently than for-profit.
Right. Okay.
You know, they're not really thought of as the same. They're way two different entities, and the taxes regarding them are handled completely differently as well.
That makes sense.
Yeah. I picked up on something you said, Corey. And this is a question for you, James, based off of what Corey said. He was saying that he was using Waze and Google to track his miles. Is there a more efficient way to track the miles and get and maximize your tax deductions from those miles versus using Waze and Google?
Yes, I mean, absolutely. I've used Waze way back in the past, but I didn't really use it for mileage tracking, so I'm not really sure how that works. But Bobby touched on it earlier with QuickBooks. QuickBooks has an app that you can use for mileage. There's a couple other subscriptions out there that you can use. They got an app, and you can have it set to automatically track every time that you go anywhere. Right. So I mean, that's going to be more fruitful, I suppose. I don't know how Waze and Google does it, but you want something tech stack. You want to be automated.
Right.
You want to have something that's going to be able to work so that you can focus on what you're doing, and then also be easier to manage, like a dashboard on the back end, so that you can go in and easily recategorize or, you know, put the specific details about the particular trip. So there's a lot of mileage apps out there. There's a lot to name.
Yeah.
But QuickBooks has one, Mile IQ, Everlance is good. I've used that before. TripLog is another good one.
Okay.
You want to automate it as much as possible.
Automate that. I use TripLog because he recommended it, but and to his point, right? It helps a lot. Like you set it up and then you set your business hours, and it does a lot of that for me. That's another opinion that I get from James. He's like, hey man, I got 300 plus uncategorized miles. I need you to go categorize those miles. Because he's helping me maximize my deductions, right? Because if I don't categorize them correctly, then what happens, James?
They're not usable.
Yeah. Yeah, and that makes a lot of sense. Because what I've been doing is, when I say my Waze, right, I always click Waze on the location where I'm going, because of the fact that I know that it gives me the miles and the timing of where I will get. And then Waze is owned by Google. And what a lot of people don't know is, if you sign into Google Maps, and you can actually track your mapping from whenever you had your Google device connected to, as long as you have your Google device on, or Google Maps app on your computer or on your phone, whenever you travel, it'll track it. It asks you one of those things: do you want to turn on or turn off when you sign into Google for the very first time? And if you turn it on, it tracks your log, and you can be able to go to maps.google.com, log in, and see all your locations that you've been throughout the entire year.
Yeah, the thing about it though is, we go back to that point that I was talking about, and you want separation. So, you know, in the event of an audit, you don't want to hand the IRS something that's also been used for personal in the past, especially if you're not going back in and putting specific details for business. There's the possibility to create a separate account for Google.
Yes.
Because I have a separate Gmail account, and then use that, but you don't want the co-mingling.
Right.
As much as possible.
So no co-mingling money and no co-mingling data.
Yes, as best as possible. Because in the event that it happens, you know, you want to be able to give them something, especially if they go back a couple of years, and not have them see a pattern that you've co-mingled.
Right.
Because then they start to probe even more.
Got it. We have a question on YouTube. Refinancing cars and houses. Do you have some helpful information? This is from Donald Rump, aka Dr. Poole.
Dr. Poole, baby.
All right. So I mean, it depends on why you're refinancing. If you're refinancing a house to try to lower the interest rate or to take some money out, then you got to have a really good, solid financial plan that you're running, and that you're going to run strictly, because that's a very major decision. When refinancing a car, if you're trying to lower the payment to increase your cash flow, right? Maybe you had a higher interest rate, you can get a better interest rate now, or maybe you've had a higher payment, you've owned a car, you paid on it for a couple years, now you're trying to refinance it to lower that payment a bit more. A lot of people don't like that, because you're paying more money over the long run, but more cash flow now means I could pay more on it also without being obligated to do so.
Right.
So it depends on what you're why you're refinancing, and that you have a solid game plan attached to it, because I've refinanced in the past and then didn't necessarily take that extra money to pay it off. Right. So you got to have a solid game plan that you're really going to actually run and commit to doing.
I think we all do that.
So wait a minute. I have a question then, because in 2021 I refinanced my home because I had a second and a third on there, and I took that funds and I paid off the second and the third. By doing that, was there a way I could have benefited from taxes on that? This was before the business. This was just personal.
No.
Okay.
No, because any home ownership or mortgage outside of taxes is really of no benefit to the individual.
Okay, because I know I paid it off. One of them accrued interest, and one of them was there. I don't. I don't know. That's one of the reasons why I made sure when I refinanced, I got a better interest rate and I was able to pay it off.
And I would say this: it depends on what that 1098E, your mortgage interest document showed. Because if it was higher than your standard deduction, then you could have itemized that year and reduce your taxable income a little bit more.
Ooh.
So that would be the tax benefit. If you refinance and all of a sudden they hit you with a lot of interest because you refinance, and now you've got 10,000 plus in interest, the report that could potentially change you using the standard deduction to use an itemizer, which people rarely are able to do nowadays.
Ladies and gentlemen, that's why we invited James Hall to the show. Come on now.
Yes.
I love talking taxes, man.
That was good. Hey, there's game to it. So I don't want to take up too much of your time. If y'all have any more questions, let's ask on the rounds, and then IG if y'all got anything, and then YouTube if y'all got anything. I can't see your Facebook, Corey. If anyone on Facebook has any questions, but go ahead and ask yours.
Will you be willing to come back closer to April 15th to talk a little bit more about taxes and also about tax extension? Because a lot of people extend to October 15th.
And who can extend and why?
Yes, absolutely. And I will say this first about extensions. Extensions don't give you extra time to pay your taxes. So the reason a lot of people extend and then they file and then they notice that the balance went up is because interest was applied.
Okay, so they even if they extend it to the October 15th, there's that interest gap that if you're getting something, you're going to get less of something, and if you have to pay something, you're going to pay more of something.
So just the latter. If you are getting, then it's not going to affect you. If you're getting the refund, it's not going to affect you. But if you have a balance, which is usually why people extend, then you're going to pay a little bit more by the deadline.
Okay, good to know.
Hey,
but yes, I would be willing.
Our tribe is saying yes, please. So we got love. That came from Danny Bernay. So that was a good question. Thank you for that. Yeah. That's much needed too, because I didn't even know that. The extension, even if you extend, it starts collecting that interest. So be wary. What you got, Bobby? Before we wrap this thing up.
I know I was gonna try to give you the floor, but I do have a very specific situation, and I think that this concerns women, and I think it's beneficial that we have somebody step forward and tell you, hey, there was a situation last year, not with me, but with somebody I was close to, where she's a small business owner, owns her own salon and everything here in Texas, and she's been claiming her daughter. She only has one daughter. She's been claiming her every single year since she was born. Well, last year, her and baby daddy, the child's father have not been in a relationship for many years. Well, he went and filed his taxes very early and claimed her on his taxes when he had never done that before. And so it left her, especially too, because he has other children. So this has never been an issue. And immediately, I went to their paperwork, and unfortunately there was nothing in the paperwork stating this through the state of Texas. But you know what I mean? And so how can women protect themselves when something like this happens? What can they legally do? You know what I mean? Whenever this happens to them, because it was wrong. He knows it was wrong. She knows it was wrong. And her tax people know it was wrong. But what can you legally do?
I may have an answer for you because I just went through that today.
Are you serious?
I'm gonna ask this before you go, Corey. I'm gonna modify that question and add it to it to protect parents, because I went through a similar thing too. I'm not a woman, but I went through the same thing to where in the previous marriage.
Yes, I do mean to say parents.
I was the one that was entitled to claim my children, and a similar thing happened to me that I had to go through and fight, because that other parent did not have the right to claim our kids, and that was a whole debacle. But I want James to answer that. So it happens to men too, the men that take care of their kids. So it's not just the women.
My bad.
And one more thing before they say they thing, it also happens to parents who adopt children. Right here. Because of the fact that the biological, it was a closed adoption, but we do we probably have an idea that was one of the situations, because my son had an identity theft claimed on him, and so I was on the phone with the IRS because they provided him a PIN, and with having a PIN, there's no, if I don't give my tax preparer that PIN, they will reject the taxes every time. So now I would, but what I didn't understand was that I had to go ahead and paper file if I don't have that PIN. And the IRS sends out that PIN every year. And if you don't get the PIN in the proper timing, because of the fact that there's, mail, COVID, XYZ, all of these things happen, that PIN prevented me from filing my taxes on time. Mm-hmm. So now I literally was on the phone with the IRS today to get my PIN for my kids and send. And if there's any wrongdoing or any identity theft, then they will always need a PIN for the rest of their life on their social security number. And you can willingly put a PIN there. So in the event, if someone uses that social security on without your permission, they will automatically kick it back.
Yeah, that's very correct. So it's getting to the point nowadays where you need to have an IP PIN. That's probably something I'm going to have to start pushing out more, because identity theft is running rampant, and then also the situation that we just talked about. Now, any event that two parents need to file, the IRS will usually defer to the one who they actually live with. So it's possible that upon speaking with them and then filing a particular form with the child on there, you might have to paper file because you can't e-file, that they will sort it out and they will strip the refund and still give the proper parent the actual refund. But this also proper parent is. So they get the one that they live with. They usually err out to the one that they live with. So if my child lived with me and then the mother filed, then I can file and get everything sorted out because I have proof that my child lived with me.
It's just there's paperwork and delays that will have to go into effect, but you will get the rightful amount that you filed for your child. And then the other person will probably get audited due to the fact that they filed without permission and consent. And the IRS, I do know this, they'll go back and look at your previous times that you used that dependent and seeing that, okay, they stayed at this address last year, they stayed at this address last year, so why is this a different address when they filing this year?
So that was my concern, was that if this kid is 14 years old and she's been claiming her for the last 14 years, and all of a sudden this person did to try to beat her to the punch, how can you rectify that situation?
Give them a call.
Yeah.
And they'll like to tell you to just file paper, right?
Give IRS a call?
Yeah. You can file paper. And then really going forward, you want to have some kind of custodial situation where it's literally on paper that you are the custodian and the other parent can't file. It may not stop them electronically, but like he said, if they continue to be a repeat offender, then they'll get in more trouble until it's time for them to stop anyway.
Because with that PIN,
let me jump in real quick, because I actually have to do everything y'all talking about, except for the PIN things. I was never involved with identity theft, but when that happened to me, my parents and plan was through the state of Arizona, and the way it was worked out, I was the one that was supposed to claim the kids up to a certain point, right? The other party reneged on that deal, and so when I called the IRS, they told me to come in. So I took the court order to the IRS building to show them, and everything James just said happened. Like, it got corrected, the other person got audited, and I eventually got the difference, right? But what I started doing, because just to try to get ahead of it, I would every year from that point on until my time was up, I couldn't claim him anymore. I literally he would do all my taxes and stuff like that. I would take the paperwork, drive it to the IRS office, and actually file in person early to get ahead of the other parent trying to do it early electronically, just to try to get ahead. Because once it happened that for one time, every year after that, I would literally take everything he did and take it to the IRS to make sure mine got in first. And I would always have a copy of the court order too that showed that no, I was the one that was entitled to claiming them. So it's gonna take some work. It's gonna take some work. And I literally had to do that until
I'm gonna reach out to my friend because I didn't know what to do, and she comes to me for all these, and all these things, and I just know she felt so defeated, and I didn't know what to do because I'd never been in that type of a situation. I do have adopted kids as well, but I haven't had situations like that happen.
Right. I have. And that's
and I know it's
this community.
Yeah.
No, this is great. And there's a link right there that she could use to get some professional help if she needs help navigating that. And everyone else that's out there too, write this link down because again, we invited James Hall here to show how much you can benefit from having a professional on your side, right? We got a lot of sports fans on here, man. None of these athletes do it on their own. They have coaches, right? Bobby, you've been on a journey, and I'm sure you've had coaches throughout your journeys and stuff like that. He is my tax coach. I go to him, I listen to him, and it keeps me out of trouble. So thanks again for joining us. The link is right there. What happens if someone decides, you know what, I want to give James a call? What does that process look like if they decide to come check you out, sir?
Absolutely. So we have a sign up form on our website, and they can just pretty much put their information in. We'll set up a brief chat, talk one-on-one, so I can make sure that we understand their particular situation, what all is needed. We give them a simple invite to our secure client portal, have them sign our engagement letter, and then the fun begins, and we just take the stress out of tax season.
Hey, taxes.
It helps a lot. Let me tell you, man. It helps me a lot. Because you see the receipts that I have, right? I'm starting early for 2025. I got these latest round of purchases I had to make. I got to put them in, everything in ways. I'm gonna scan it and everything. He's gonna see it. So I do that year-round stuff. It makes it a lot easier. He's about to ping me for all my 2024 stuff so we could file it, right? So hit him up. Don't go out this alone. I know a lot of people, no shame on the DIY thing, but that's not my thing. I used to do the TurboTax stuff too until I got to a point. I'm like, I go to him. He's been keeping me out of trouble. I haven't been audited. I pay for the tax, the auditing protection services. So that's what's up. And then thanks for committing to come back in April to talk about those extensions. Thank you.
Yeah.
And no, thanks again for joining. I think this was good. It's early. It's early enough to where people can get going with that. We got a question. I'm gonna ask you this last question before we sign off. This comes from Creative Native on IG. Does your baby oil purchase get written off if you're a Diddy?
Oh.
No, you didn't.
I can't even justify that with an answer.
1,000 bottles of baby oil.
If he's got a great CPA, then I guess so, but it's gonna be audited.
Yeah,
that's cool. On that note, thanks again. If y'all want to get with him, get that link. That link will be in the description below in the video. Bobby, let the folks know what you can help them with if they out here in San Antonio, Texas.
And if you're out here in San Antonio, we would love to help you out. If you have any water damage, if you have water leaking somewhere, let's work together. Let's figure it out. We work with your homeowner's insurance so you don't pay anything out of pocket for us. We are Patriot Restorations, LLC, owned and operated by yours truly, Bobby Lopez. We are a service-disabled, veteran-owned small business, SDVOSB, here in the state of Texas. We'd be more than happy to help you out with your needs.
Yes. Corey Giovanni, what can you help folks with your services, sir?
It's the main man with the game plan, Corey Giovanni. And Corey Giovanni is in for small business marketing for your social medias. Also, if you need a podcast, we now actually produce podcasts for you. So all you have to do is sit, smile, and go over your data with your client, and then you're good to go. Also, we want to make sure that, being that this is technically speaking, like, comment, subscribe, and share, because we're giving you news that you can use. Zemo, lead us out, brother.
Hey, so I am Geronimo, aka Tech_Von_Go on IG. And right now, we're working on the short-term rental. We're about to see what happens. We had a funny situation today. I'm there setting some stuff up. I'm close to 2 universities out here, so actually a couple of college kids came out to look at it. Their parents might be paying that rent, but I said that to say, if you're looking for somewhere for your college children to go to Trinity University or what's the other one, UIW, it's right down the street from both of those universities. So not only if you're looking for somewhere to visit, to stay in San Antonio, also if you're looking for somewhere for your children that are going to college, I can help you out. So hit me up. We can get that connected. Hey, and that concludes this nice episode of Technically Speaking. Thank y'all. We love y'all. We are out.